Hello, traders. Today I'm gonna talk about Wedge. Yes, Wedge. One of the best patterns that you can find daily, in the daily basis, in all markets that you might find. In the background, you can hear the famous bossa nova music for the ones who likes music. I put some music in the background, so I hope you like Brazilian music. Good. But then today we'll talk about wedges and how to trade those patterns and what our Brooks teaches us about it. I hope you find this video very useful for you. Please don't forget to give the like. You know, do it right now. Starting the video in order that you cannot forget that, and share this video with anyone else that wants to mastering how to trade wedge and how to make this pattern profitable during the day trading, right? So during the day. So a little bit more of bossa nova is here. Corcovado music. Beautiful music to start the day. So let's go to the what really is the matter for today. What our Brooks tell us about well, sorry, I'm a little bit cold, so you're gonna get some cough, but hope it's not gonna decrease the quality of the video. So Brooks speaks to us that wedges are continuation patterns when they are pullbacks within trends, right? So that's really important. And they are reversal pattern when they are large and the context is right. So when they are large, the context is it's right. So we have the right context. We can oh sorry. We can consider that like as a reversal pattern. For example, we have a trending that is he has most of the day trending and then makes a wedge top. So that's a reversal pattern. We'll see that. When they are flags, they are small reversal patterns, okay, or minor reversal patterns. For example, when there is a wedge pullback in a bull trend, the wedge is a small bare leg, right? Of course, we have three pushes down. This is a wedge in a bull trend, so we call that a wedge bull flag, right? So they expect that the bare leg to fail and reverse up for another for resumption of the trend. That's basically what else speaks, right? In the broadest sense, a wedge is any pattern with three, sometimes four or five pushes that is slap it up or down. It doesn't have to be convergent, and the third push does have to exceed the second. We'll see something like that. As soon as there are two pushes, traders can draw a line connecting them, a channel line basically, channel line, okay, connecting them, and then can extend the line to the right, a trend channel line, right? So they will then watch for reversal if the market approaches the line for a third time. So that you can find that in the Brooks trading course in the 10 best price action trading patterns. This is one of my favorites. This wedge and then major trend reversal for me are the best ones to trade. I have that phrase in Wedges I Trust by Eddie Monster. Why? Because one, wedges represent decision points. So this kind of binary decision when we have a wedge. So or work as a trend flag most of the time, right? So Usually we have a trend flag. It is a flag, or it's a failing wedge, which is low probability. Okay, so you know what to do. Well, that's why it's a decision point. It's a binary decision. Work as a reversal pattern for minor or major trend reversal. Okay, or fails, which is will create will generates a breakout, right? Give us previsibility. So that's one of the most important capabilities or abilities that we can get from wedges is this. After the second touch in channel line, you can draw a third touch and wait. So you can draw the channel line and then wait. You know what is going to happen when touched for the third time. It is expected 2 legs of pullback after a wedge. So 3 pushes up or down, and then you expect 2 legs as a reversal. Could be sideways, of course, but you need to be very, you have to pay attention on that. If it doesn't do 2 legs, then trend to fail, and that will become a failed wedge setup. You know what to do when it works and when isn't. So that's give you previsibility, so you will be ready for whatever scenario it's developed. Okay, 25 probability to break out channel line. Okay, that's the probability that we have always in a channel line, and 20% of breakout when it is in the limits of trading range. So if you have a wedge top or a wedge bottom in the limits of the trading range, you have those 2 edges to to bet in a reversal, for example. So it's so low probability to break out up or down if we have a wedge in a trading range. Wedge have clear premises as a standard trade management. Clear premises, clear target, defined in advance. We'll see that, how to define the target. Clear protective stop. Risk reward 2x or more, and works for swing or scalps depending on. So for swings, it is basically if you are in an early trend, early day, so you can make a swing for getting a second leg up, or scalps if you are in a in above mid of the day, so you can scalp them, right? So basically it's that. One of the things that we will need to know always, wedges are not perfect, and this is yesterday. So you see here, today is Saturday 23 when I'm recording this video. So this is a Standard & Poor's of Friday, right? So you see here, 1 push down, 2nd push down, 3rd push down. I makes a 4, right? So this is an overshot, in my opinion, right? Of course. But you have 3 clear pushes down, perfect here, right? But you have an additional overshoot. That's why sometimes it's not recommended to use this low as a protective top, okay? Especially when it's coming here like this, that is a tight channel without, bars going up another bar. So you see it's a micro channel, right? When we have this like this, so we see in the top, we have 1, 2, and 3 pushes down. So 244 is the 3rd push, and then we have an overshoot. This is a parabolic wedge, right? And then an overshoot like this. When we have this first leg, we know that that was a wedge. This is climatic, right? And then it's gonna revert. So we know all that, okay? When we have this wedge here, and then, okay? That's they're not perfect. That's usually are not perfect. If we have a perfect wedge, it's something that is not so common. Type of wedges that we have, and we'll see in the chart with more details. But we have a wedge top falling. So it's falling. It's a wedge top. We have wedge bottom. Sorry, That's a wedge bottom here. And then we have a wedge top rising here, right? So this is always standard of pours. Those are wedge flags here. Flags because you're coming for a trend, bull trend, and then a flag like this and resumption. And this is the bear flag. Sorry. This is the bear flag. It's rising here and then break out down. Continue the bear trend. Basically, is that. Okay? Those are the type of flag, the wedge. So we have bottom, top, wedge bottom, wedge top, wedge flags, basically bull flags and bear flags. Those are the wedges. We have parabolic wedge, but this is kind of wedge top or wedge bottom, right? Basically. So I have this cheat sheet, the how to trade each one. I want to explain this because it is not wedge because it's a wedge that you're gonna trade that. You have to consider some of the elements that wedge is inserted in. The first one is the context, right? So you need to be clear about the context. We're in a trend and we're in a trading range. Those are the contexts. It doesn't matter if you broad channel, type channel, whatever. We are in a trend or we are in a trading range. So you have in a broad channel, you have to trade it as a trading range. Basically, is that. You are in a time channel, you have to trade it as a trend. But essentially, it's a trend or it's a trading range. It's kind of binary in that way, right? The timing. So, what is the timing? This is basically Brazilian futures. We have 113 bars, but when we goes to this S&P, we have 80 bars. So midday or early in the morning, before bar 40, we have, and we are in a trend. This will be the okay. We have that set. Then we have a behavior after midday and above. Let's say looking for the final of end of the day, right? So bar 40 and so on. And then any time in trading range. So those are the three timings. It is important. Why? Because if you're in a trend and you are above midday, so you are getting close to the end of the day, then probably a wedge flag, a wedge top could be operated contra trend, for example, right? So that's the difference. So between early in the morning or early in the midday versus above midday. So I make that different here. Okay, so we need to take that in consideration too. What is the type of the wedge? We see here, same, the flags at the top, at the bottom, and then falling and rising, right? So when we are in the early in the morning, we have a wedge, we operate that weight trend. So on the way of the trend, basically is that, okay? So if it's top or bottom, we operate the trending, right? Basically is that. And then if we have a wedge, after midday, we can even decide if we have a top or bottom, we can operate counter trend. But it's a flag of we continue operating that trending. Okay. Trending range, its top is rising, it's a reversal. So trending reversal, and bottom is a trending reversal. So we have a good edge in the trending reversal. It's counter trend, we can say that, but it's a trending range. So we might trust on the reversal coming from a wedge top or a wedge bottom. Okay. So what are the kind of entries that we might have. We can have trading. We can trade trades in the channel line, betting on the failure breakout of that channel line. Remember, we have just 25% of probability of breaking out this channel line, so you have 75% chances of failure breakout. So we have that edge. So in that sense, make a limit order or a fade of one bar closing on the channel line. It's one of the kind of entry that we can do. We'll see something like that. And then we have an entry of signal bar with a stop order. Okay. We have an entry of the breakout of the of breakout of the flag. Okay, breaking out flag, so you can enter, let's say, late. Okay, and then you have the breakout pullback second entry with stop order or even the close. So those are the four types of of um, of entries, the 4 or 5 types of entry we can make. Okay, there we have the stop loss. What is the effective stop loss? Effective because, at the beginning when you enter, you can use a wire stop, but then the effective is the one. So we see this is a decision point. The third push will be, the reference for the stop loss, effective stop loss. See, we lose the third push high or low, then it could configure a failed wedge, right? So the effective stop loss always will be in the third push or so. When we talk about target, and I was saying, we have a defined target already. When you see a wedge, you already know what is the target. So we'll see when we are in a trend and we're operating a flag, right? So what is the target? Minimum target is 2 legs. So we have a wedge flag, so we can get 2 legs as a minimum, right? What is the standard? Say the standard target, the ones that I'll recommend is the wedge starts, when the movement starts, when the first push starts, right? The start of the wedge. And then what is the max? New high, low, or even second leg up in a trend. So this is for trending. So this is the best scenario. You can get paid off of 2 or 3x or more. So when you get early a flag with the trend in your favor, you can make any kind of entries. You can use the third push, low or high, as a stop. You can expect 2 legs as a minimum, or a max you could have 2 or 3x your risk. Basically is that. That's the best scenario possible. Then when you are in a trend, right, and you have a wedge top, and you're operating trending, so you need to wait for the breakout of that. That's basically that, and a good signal bar, right? Doesn't have a good payout because we are in a rising and bottom, so probably this is not the best. Of course, we're trying to looking for continuity in a top rising wedge, so that's not common. The common is that when you have a wedge top in early in the morning, we can say you might have 2 legs, correction, 2 legs pullback. Probably if the trend is strong, depending on the strong, if the trend is strong or not, you might have two couple of legs, over, sideways, very overlapped, and then you can get into the trending. pretty much the same thing to the bottom. So it's not a recommendable entries. It's not the best scenario. Okay. While we have in the after the midday bar 40, for example, we have flag falling right rising. We still have the edge of the trend, but this is a trend that has so many bars, so it is probably weakening, right? And then you can make the entry with the with the limit, but we don't recommend to use the breakout. Why it's not? Because you might be buying high versus the previous the previous the previous the previous high, let's say, versus the target, right? So versus the target of the wedge. We'll see that in the next example. And then you have the double top of the double bottom as max target. So you need to be very discretionary on this and be disciplined when you have a trending and a flag looking for the end of the day. We shouldn't be greedy and looking for more. So it's a double top, a double bottom, and then 1, 2x from the start. Okay. When I say breakout pullback, I'll be back to the breakout pullback and explain that a little bit more. Then counter trend, when we have a trend that is, late on the day, we have a top wedge and a bottom wedge. We can bet on counter trend, of course, right? So this is something that we can make. It's better to make with limit and fade. This is not a trade for beginners. It's a trade for experienced traders, of course. It is not recommended to use signal bars because you're gonna be a little bit in the middle or higher in the versus the start of the wedge, depending on the wedge, of course, right? So you need to consider the context to see. Breakout also no, because you're gonna be, you're gonna be high, of course, and then breakout pullback will be a good entry, even if this is more secure entry, and you have a higher low and a lower high. Okay. The standard target is the wedge start, spike and channel. It's gonna be a spike and channel, for example. This is gonna be a pattern spike and channel. And then, like this is a counter trend, you can have more than 3x. It's like a major reversal, but then you can have a minor reversal, like 2 legs in the, for example, in the EMA or something, in the EMA, in the moving average, or you can get a minor reversal to the wedge starts, to the spike and channel target, or even you can get a major trend reversal going up. So you can get those three scenarios, and that's the edge of taking this trade. What is the stop? It's gonna be the low of the third push, right? So it's the effective stop. So good short stop and then big reward. And trading range for me is one of the most reliable setups. And yesterday we see a couple of examples, and I did both, right? So you can enter with limit fade, and I made yesterday a fade entry, right? We can enter in a signal bar. I made yesterday an entry with a signal bar. I'll explain that. Breakout. I think that I did this breakout too yesterday, and then second entry. So stop with the stop order. So we'll see that, and then the minimum target that I'll recommend is the half of the trading range, or 2 legs, right? Basically 2 legs, or even the max will be the opposite limit. So you can bet for the high of the low of the trading range. Basically, it's that, and it is a good payoff. Good payoff. We'll see those examples, right? So let's hunt some wedges during the past 15 days or so. Okay, let's try to do that. And when I'm hunting, I'll tell you how to trade those, how to enter that. It's not in real time. I know that, but I have done that in real time yesterday. So I'll show you what I did yesterday in ES. Okay. Don't forget to give us a like, click subscribe to our channel, and share with somebody else. I really convinced that they will have a lot of people to be consistent, right? If you really, we'll see here, if you really focus on wedges and just wedges, you're gonna be profitable. Let's see that in the chart. So let me try to do something here. What I put here is the cheat sheet, right? That I have. And then the way that we can we can trade it. And here some of the some of the trades that I did in this. For example, this is kind of, I pick this week, just an example, and take all the patterns and see how many wins, how many lost. 68% in this week with two X. So this is really good payoff. So it's 70% of the time in this week. This is basically on Brazilian futures. You got 2X of your effective stop. So that's the effectiveness of a wedge. So if we see ES yesterday, let me show you here what are the trades that I did with this today, yesterday. For the ones that are not, say, well, you're not showing this in real time, but I'm showing the trades that I did. Basically, this is a wedge, right? And this is out another wedge. So we can see this wedge here is a micro channel, right? But it's a wedge because it has very deep pullbacks in it. So in the lower time frame, you can see this is a good wedge. So this is the first touch, second touch, third touch. One of the ways to operate this is to fade this wedge. This is a trading range price action, right? So you can fade this wedge. Okay, this is one. So we are in trading range. That's the context. Okay, this is a bottom wedge. Okay, we can fade that. Okay, we can use a signal bar. So this is a signal bar. It was not triggered, but you can buy above that one. Okay, and then you cannot buy the breakout. So what is the breakout? Breakout of the wedge is like this. So this is a trending line. Right? It's a trending line. Let me put it better here. Right? And then you have this bar. This is a breakout bar. This bar here. Right? This is a breakout bar. What I'm saying is you cannot buy this bar. Why is that? You cannot buy here this breakout. because you will be, look at this, close to the 50%. So where it's supposed to be in a trading range, there you're taking profit area. So it's not, your risk reward is not good in that sense. If you buy this signal bar, you're gonna be probably in the lower tier, right? So it's still okay, but this one is close to the 50%, so it's not good entry. That's why in trade range you cannot get the breakout of the floor. You need to really trust on the channel line and fade or make a limit. And then the second entry is kind of like this. Let me tell you. You can buy, if you have this bar, reversing this clearly a climatic bar, you can buy second entry here when it's retested. And I did that with micros, now with mini. This is mini. So you can buy here. That's the second entry, right? Here. Or you can buy here about this bar. Okay. But never in a trading range buy the breakout, because you're gonna be with a bad risk reward equation, right? So let's see what is the protective top here. This is the protective top, right? Here, below the third push. Of course, we have a fourth push here, but that's the protective top, okay? So then, if you enter here, you have 2 points, 2.5, okay? And you get let's see, you get 2.5 your risk, effective risk. Even if we put it here, it will be even 3. But let's set it here, some ticks below, right? 2.5x, so more than 2, right? Here, and we're talking about second leg, so we expect 2 legs, 1 leg, pull back, second leg. So you exit here or you exit here. But normally we expect the second leg up, this one. Okay, when you have this bar here and then the second leg like this, you need to exit in the closest to this bar here. And then you're gonna get the maximizing this trade. So this is a trade of 7.5 points. Nice. So this is the bottom. Okay, let's go for the next one. Yesterday. This is another bottom wedge bottom, right? So 1, 2, 3, and then I did this. We have that wedge, but also we have this line too, right? Like this. So I have that line here. When I have this line here, what I did, fade it. I did fade this bar. So what happened is the slippage is, I don't know if the slippage on the or the spread, it made me it was kind of quick. Put the stop a little bit wider. Sometimes we recommended to use a bar now, so like this. So you have 4 points. stop here. Initial, original stop, right? But the actual is always will always be this. So again, you fade this bar. This is the first entry. This is a wedge bottom in a trading range, of course. That's the first way to do it. Second way to do it is signal bar. This is a signal bar, right? Where's the target? Start of the wedge. The target is this one here. That's a minimum target. That's a minimum target. So if you go to the minimum target and you consider this like a this, we have, look at this, 1.75 points of, and then you made till the target four times, right? But it goes here with just one leg, right? This is one leg. So we're in a trading range, right? We have this target here. This is a minimum target. Okay, in the middle, or in the middle here. You can expect a second leg up. So looking for this limit, right? So you can exit here, and when you have a trade of 1.7 points, you could get 10 times your risk. 9 times, right? Let's see. 9 times your risk, or so. 8 times. Look at this. It is not wonderful? Yes, right? You have that target that is all 8 times from this, right? So if we use the signal bar, you put your stop below the signal bar, that's a confirmation. So you have there 3 points stop, wow, which is really good. And then will be 4 times, so it will be 3.5 points. 3.5 points times, right? A trade of 3.5 will be 10 points of reward, which is really nice. So more than 3 times again. So that's the advantage of a wedge top, a wedge bottom. And then when you have a wedge top like this, right? Coming from a trend like this, but I did this one and an exit here. So I make let's say 10 points. Yeah, I made 10 points there, which is good. Expected, right? But let's say the another way to entry is to use a pullback. They were not pullback, but you know, if it's coming here after this bar, it's coming here testing this high or testing the low of the close of this bar here, then you can buy here again to look for the second entry, or even buy the second entry, but we don't have in this case. And then the third one is the ones that I don't like and I don't recommend, is the flag breakout. It's like this. In trading range, you cannot do that. It's like this. It's like a buy here because it's a flag. So you are even higher in the trading range. So it's not a good edge because your stop will need to be here eventually. If you put it here, it's a stop, it's a scum stop, and it's gonna be it's probably it's gonna be test. Here we didn't have it, but usually you're gonna test here, go here to test this high, and then go up. So that's in the best trade. So in trading range, down by you know above 50%, that will kill you in the long term. Oh, all right. Then my what I doing always when I'm in the swing. So this I'll try to look for the second leg because it was a good it was a good was a good leg, and then we're coming from a trending. So coming from a trending, if you see here, we're coming from a trending, a trend. So I was kind of looking this like a flag in the higher time frame. So I was looking for more for breaking out this and make the measure move up, right? So I stay, didn't exit here, and I stayed, and I will exit below an L2 like this. This is L2. I did exit below, again, below this bar, the fact, or something. So this is L1, L2. I exit always for swings below L2s with follow through. Basically, is that inside bar. This is a reversal pattern in a trading range out. Basically, is that. But if you are, for example, if you're not positioned in the long here, and you wanted to operate trade this wedge, this is the way that we can do it. Look at this. First of all, you can make the fade. You can make this trade using the channel line. So you can fade this. You're close to this, right? To the height of the day. I don't recommend this because this is strong, but it's better when you are, it's better to wait for the fail, right? But you are in a wedge bottom, in a wedge top. So you can do that. That's what I'm recommending, right? And then you can kind of make this up, right? And put it up as a stop there. So you have 5-point stop in the actual. That's the way to operate that. So you use this high, this, and you project up, right? And you're gonna be fine. And then we have this overshoot. This is not good when you see it, but then you need to wait. So if we have, for example, this is a decision point. This is a parabolic wedge. If we have this bar after this, fading in the height of the day, this is a decision point. Above this bar, eventually your premise of wedge top is will not be more valid. So it's gonna become in a breakout. So that's when breakouts happens, right? When you have a wedge like this top, and then you have follow through up. So your initial stop is there, but is there up, right? Let me tell you where. Your initial stop is gonna be there, but then when this bar happens, 248, your stop needs to be here. No more than that, guys. So you need to put your protected stop here. Why is that? Because the premise is this needs to fail in the low in the half of the day, right? That's the premise. And then if not failing is go up and break out this, then it's gonna be a failed wedge and a breakout up. So that's basically the premise. So then when you have this, we can say, well, now we have effective stop is about 3 points, right? And what we expect from a wedge stop, 2 legs down. 1, 2 legs down. Basically, that's the mind. When we are in a trading range, we can expect the limit, that's the limit. But you have 3 points stop for this, okay? So this is the first entry. So the first entry is the channel line. The second entry will be this bar. So you can fade this bar. For example, this testing the limit, so you can fade that bar. It's an overshoot, right? And the stop will be this bar up or even this up initially. Then you can move your protective stops here, right? After this bar. That's that's a fade, that's a limit order, right? And now this is the signal bar. So then you can be short. Well, this is red, right? It needs to be red. It's short. It needs to be red. And it needs to be red. Okay? Three entries. Signal bar with ordered stop order. Even below this bar will be great to have. So this is, right? The second entry in the top. And then you have a second entry that is the L2 here. Right? This is the second entry here. Right? Basically is that. Where is the breakout? This is the breakout here. I did that one. This is the breakout. So those are the entries, right? Why this is not so good and I did it, right? I did it because this breakout, we were kind of still in the third, close to the third. But, it's not the recommended one, okay? But I did it. Look at this that I really exit quickly. So it's a scalp, it's good, but it was not the best trade, to be honest, okay? So this is the best entry. I was long, okay? So here when we have the two legs of correction, this is the minimum, right? The target is here when it goes at the end of the day, right? So we can consider these two legs, or we can consider this starting here when we make the pullback, the first leg down and then second leg down, testing the limits. So it works very well, right? So this is the second entry. Then let's see if we consider this like the first entry, how many points do we get? Pretty much the same thing, three, four times, right? 4 times. So that's the beauty of the wedge, guys, in wedge bottom and wedge top, right? So those are the kind of entries you can do. This is the entry of limit, fade, signal bar, second entry, breakout pullback, second entry, and breakout. That's basically the entries, okay? So now let's find some flags. Let's try to find some flags here. Try to use this one. Or this one here. It's a wedge bottom here. See there? This is something interesting for us to take a look here. Look at this. We have a wedge top here. This is a wedge top. And then it didn't make two legs, right? It just getting up. That's what I'm saying. This is the stop. If you wanna enter here, this is a wedge top, right? And then when it goes up, this bar here, that's a failed wedge. And when you have a failed wedge, you you can make this measure move up like this, and you get that result, something like that. Okay. I'm trying to get a flag here. Well, let me take off this. Let's forget it. All right. Look at this. It's kind of late on the night, but let's see. You have this spike, then you have a wedge here. 1, 2, 3 pushes up. Right? So this is a spike, this is a wedge. So how do you trade this? Weight trainer in favor of the trend. So this is a bear impulse, a spike, and then we can expect a second like that. So what are the ways to trade it? You can use this line here or here. When you are weight train, it doesn't matter where the stop is gonna be. You can put the stop here. Doesn't matter. It's not gonna be hidden there. You can buy limit order there. Sorry, sell. Limit order here. Or limit order here. Your initial stop is up there, right? What is the targets? Let's say these targets. We are in a trend, so minimum target is 2 legs testing this start of the wedge. That is the start of the wedge. And that's the minimum target, right? But then as you are in a trend, and this is a bear flag, you have another target that's leg 1, pull back leg 2 here. This is the best scenario, right? Best scenario is a wedge flag like this with a clear targets like this. So let's see. You enter here with the limit order or fade even here. Fade here. You can fade that bar. Okay, that's the enter. Limit or fade in the third push up. Okay, of the wedge. Put here wedge. Bear flag. Okay. The second way to enter is using the signal bar. This one. It's a huge signal bar versus the bars. Okay. This is the trending line. Okay. The third way to enter is the first, second way to enter, third, and the fourth way to enter is this pullback, right? Breakout pullback. Then you get whatever you want to get. You can put a limit order here, right? You can fade this bar. You can use this bar here, like a signal bar, whatever. It's not the best bars, but you can buy. You can be short below those levels here. And the fourth thing is the breakout. The fifth, right? It's the breakout bar. This is the breakout of the wedge flag. So what are the targets? Targets is this. Look at this. Where is versus this minimum target? Of course, you are weight trained, so you can expect the second leg down. If you goes and exit here, this is the minimum. Let's say, let me see here. Weight train, right? The minimum is when the wedge starts. This is the minimum. Right? You can expect two legs starting here. One, pull back, two legs. Okay. New high, new low, of course. So gonna have new high, new low in this case, maximum. And two legs. So that's basically what's happening here. Same thing, right? So let's talk about stop and risk reward. So if you enter here, put the stop, original stop there, it's gonna be 3 points or so. Then you move here, it's gonna be 1 point. To be honest, it's half a point because this is Globex, right? So that to the minimum target is gonna be 5 times that stop. For the leg 1, leg 2, it's gonna be 7 times, so 8 times, 8 times or so. Right. For these, let's say entries here, and for these entries, when you goes to the signal bar, it's gonna be 4 times. At least 2 times or more, right? So you see here, you have a good edge in terms of risk reward, but then when you goes to the breakout, it's not so good because you have less reward, and your stop is gonna be here like this. So you have 1-on-1. That's why it's better to anticipate the entries on the wedge. Okay, so this is a wedge bear flag. Let's try to find a wedge bull flag. This is not perfect, but this is a wedge bull flag again. We have 1, 2, and 3 pushes, right? It is not perfect. It is good. So, how to do this? This is not perfect wedge, right? So when you have the second push down, you might put your third, your line like this. Then wait for the third push down, and you have a strong trend behind. Look at this, right? Strong trend behind. So you can expect this third push fail and go up. But it didn't get there. So you don't have choice, because sometimes when you have, for example, the moving average here like a support, the first time that it's touching after a trend like this, it's not gonna get there. So you're gonna find some buyers there. Then sometimes it's better to look for those reference like the moving average, and then try to pick it from them. Where are we? We are in the end of the day. So weight train, end of the day. Let's see. Flag is trending, of course. So we can enter with limit fade if we have the chance, right? But we didn't have the chance, right? If we have this bar like this, failing in the moving average, we can say that we can try to buy as lower as possible, like this line. So with this fail, that is a relevant fail, you might imply that we will have buyers or sellers being exiting in the close of this bar 261, right? So you can buy during this 263 here with limit order. Then you have clearly the issue here is that you might have a third push down, but you realizing that you are in the moving average. So you can take that risk, but then you need to really put the stop right below this, something like this. It's gonna be 6 points because you have room for getting the third touch here. So that's the tricky thing. So that's why you need to buy as as lower as possible in this flag, right? One thing is that you can buy below this bar, or even using 1 minute, you can get a kind of signal. This is something that is kind of tricky when you have a wedge like this, truncated wedge, right? It's not perfect. So you can buy here. This is a signal bar that, based on the context, is enough because we are weight trend or waiting the trend, right? So you can buy this one here, right? And then what are the targets? Target is start of the wedge, or if we are in a trending, so we can look for the height of the day. Double top, right? Start of the wedge is basically this line here. Okay, so that area will be the target. So your initial stop will be here, but then when you have this signal bar and this follow through in this 266, then you set your stop below the signal bar here. All right. And can you buy 262 above? Okay, if you want to do it. But I see this like a strong, so you might find another just below the EMA. So I don't like that kind of bars with that, tail above. So clear push down failed, you can get it in this doji above that doji. Okay. Protective top here, right after this bar 266, and that's the breakout bar. Right, so we see here this push, second push, that's the breakout bar here. So buying here, look at this, is not good. You're in the middle of the day, probably you're gonna have a double top and that's it, right? So the best entry in that case is we use limit fade, we use signal bar like this, right? And we use if we have second entry close, right? We didn't have, right, that second entry. It's like we have this bar coming in here and then a signal bar here, but we didn't have that. So those are the entries that we can see in the wedge flag, right? And then what is gonna be your reward? You enter here, your reward is gonna be at least 2 times. Look at this. Beautiful. If you enter here, your reward is gonna be 3 times. That's it. So that's the magic wedge, guys. That's the way that we can enter. I hope you find it, useful. Um, there is another variances like a wedge verb, failed wedge. I explain one quickly, but let me find another just to close. Another failed wedge, which is one of my favorite. Look at this. This is a wedge here, right? Then what do you expect from a wedge? Two legs down. One, two legs. Makes what is expected sideways. So if you enter here in the M of 60 minutes, you enter here. You need to know that the minimum target is 2. And this is a top, wedge top. It's a wedge bear flag, in fact. Because it's coming from this, right? Wedge bear flag, it makes 2 legs down. When it makes 2 legs down and you have this beautiful bar or this beautiful bar here, it means that we're gonna we're gonna have resumption on the trend. So wedge 2 legs sideways and then trend resumption for this spike, right? And then we have a wedge top here. Start to come from this spike. Look at this, beautiful, right? And then overshoot 2 legs down or 2 legs down here. So very sideways in it, looking for the end of the day, right? Here we have a wedge bottom. So you can see there, this is 1, 2, it's not perfect, 3, right? And then it's not perfect, so it's hard to get it, but let's look at this. This is a spike, right? And channel in a wedge bottom. 1, 2, 3. So if you make this a perfect wedge here, look at this. If you get this in the channel line here, you have the low for the day, right? That's the low of the day. And then you have another wedge you can exit here. For example, this is a spike and channel target minimum here. This is a minimum target even in the EMA, so it would be great to exit there. If you want to keep it because it was strong, you got L1, so it's a tight channel. But this is a third climatic stuff, so you might exit here. And look at that, reverse everything. So now it's more trading range, 2 legs down and then up, breaking out. Right? Let me see if I can find something else. Another wedge bottom here. It's not perfect because it has a space below, but this is a good signal bar. Then we have a pullback. 2 legs down, 2 legs up. Beautiful. This is a failed wedge here. This is tricky. Oh, well, makes 1, 2 legs up and then trend resumption in 3 legs down. So that's normal to have then 3 legs down again and then reverse. But you can see you have 2 legs almost always. Look at this. Another wedge here. It's not perfect again, so you have here 1, 2 legs up. Another wedge here, bottom, 1, 2 legs up. It's a wedge top and then reverts. Looking for a failed wedge. Oh, look at this. One, pull back, two, pull back, three. So this is a wedge, right? It's coming from it's a wedge top coming from a spike, right? So it has a chance to be, it's a rising wedge, but it have a chance to be a failed wedge if it's coming from a spike. So then this wedge here is a failed wedge because it didn't make two legs of pullback, right? It just make one, and then breaking up. When you have that, you can make this like this, measure move up. That's a failed wedge too. This is one of my favorite, setups because when you have a failed wedge, it's always accelerate like this because it's a low probability event. All low probability events goes quickly to the next price reference. Could be a support or a resistance, major support, major resistance. So that's why. If you're selling here, for example, selling here below this bar, this EE is EEE. Look at this, it's a breakup mode. If you're selling below here and you get these bars, you can reverse here and enjoy all this stuff, right? That's why this is a decision point. That's why this is important. And that's why this is more reliable patterns in the way that you know what to expect, what to do when something like this happens, right? Well, that's it. That what I want to show you for today. Um, Thank you very much for your attention, and don't forget to give us your like, and please share this video with anyone else that you might think that will need it. Thank you very much for watching me.